And right now, I'm in this one. I got into it yesterday, 20 hours ago. It's paying 256% APR. I got in there with $4 grand. I'm up 139 bucks on principal, and I got 25 bucks in fees. Okay, so that's not bad. So
That's nice. I think yeah, earning 25 bucks in a day on that adds up.
for just $4 grand, that's not bad. And now, what we teach inside of our community, guys, because you're probably thinking like, oh, 25 bucks. One, you have compound interest. So inside of our community, we essentially teach you how to run your portfolio like a market maker, right? And if you look at the portfolios of market makers, look at Citadel, look at Goldman Sachs, look at Deutsche Bank, they don't use all their capital for market making. Yield farming is just another word for market making. Depositing money on traditional exchanges, just like we're doing with Zora and ETH, they'll do this for Apple and USDC, or USD, Apple and Tesla, like the stock pairs that we buy. They don't use their whole portfolio for that. They'll have a certain percentage of their portfolio that they use for market making. They'll have another percentage of their portfolio that they have in cash, and they have another percentage of their portfolio that they have in assets, and they rebalance on a consistent basis. And rebalancing forces you, because this is what we're about to do, rebalancing forces you to buy low and sell high. I'll give you an example. Let's say you want 40% of your portfolio to be in ETH, and ETH does a 2x. And now that 40% of your portfolio in ETH represents, let's say, 70%. So now when you go to rebalance at the end of the month or the end of the quarter, whatever your rebalancing schedule is, you have to get back down to that 40%. So it's going to force you to sell ETH at a profit. Another example, if, let's say, same thing, your balance target is 40%, ETH drops 20%, and now you're at 28% ETH. You need to get back up to your 30. Well, guess what? Now you have to buy ETH at a discount. So when you continue to do that over years, it literally, no matter how you slice it, as long as you're not buying BS assets, it forces you to win. There's no way around it. This is how institutional investors manage their portfolio. And this is why they win. You have to have failure to plan is a plan to fail. So now going back to this, when I look at my rewards, it's 25 bucks, right? I'm expecting Zora to do a 10 to 50x from here. And I'm going to be coming out with a fundamental analysis on Zora within the next week that I'll share. But the thing is, people might be asking, well, why don't I just buy Zora and not get into the pool? Like, why wouldn't Basejunkie just take his $1,000 and buy Zora? Well, like I said, you want to have an asset portion, and that part will be included in his asset portion. So when the price of Zora goes up, he has his sell targets to sell. But for your market making portion, we have no idea when Zora is going to pump. It could pump in January. So from now, September, we can be accumulating Zora for 4 months. So instead of having $1,000 that you just throw in there and you're just waiting, he has this other portion of Zora that he's just sitting there. And then now from his fees, what I do is I'll take half of my fees. I'll use it to buy things that I want to buy. So like in this case, Zora and ETH. Let's say I get $100 in fees, right? And rewards. I'll take the $100, withdraw it, $50, split it up, 25 Zora, 25 ETH, boom. And I put the other $50 back into my pool to compound. So now instead of having $1,000, I have $1,050. And instead of getting, 256% APR on $1,000, I'm getting 256% APR on $1,050. And this is when compound interest comes into play. And compound interest, it's that hockey stick growth. Our brain has a hard time conceptualizing compound interest. It's the whole question. Would you rather have $1 million or a penny doubled every day for 30 days? You take the $1 million, you just missed out on an additional $4 million because compound interest gets crazy real fast. But on like the first couple weeks, it's just like, oh, it's not worth it. But then like around the 25th, 30th day, 25th-ish day, it starts to get really, really crazy.